Okay, good morning. It is Thursday, March 17th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Just to quickly review yesterday, the expectation was for a pullback if we couldn't get through the overnight high. Just out of the open there, we did get a nice bullish push, basically right out of the open, and we got the push through the overnight high, and then we were basically bull bias. Now, there were some interesting things that occurred. First thing that really kind of stuck out to me was we came right up into this blue line you see on the chart here was, I believe, 50%. Let me just zoom back out and see. I believe it was 50 or 30. Yeah, 50% of the whole leg down was right into that level. So we came up in, I think it was 35.50. Yeah, 35.50 was the level. The high of the morning there was 39.75. So it peaked through about 4 points and then couldn't get through that level and started to pull back. It came down right into our second expected support zone. So yesterday, if you were here, you would have known that we highlighted that 56.50 right up into the 38% retracement level, just a few points above it. And then we looked at this little zone here between 39 and 43. And sure enough, the sell-off in the afternoon after the Fed hike, we pushed right into VWAP, rejected right out of VWAP. I mean, it literally peaked through by 2 or 3 ticks, sold off, came right into our first expected support zone, bounced out of it, came back down, came into our second support zone, and then ripped out from there. So that's where it brings us this morning. We did continue to push. We got to new highs at the end of the day there, and now we're starting to kind of peter out. So that's where we find ourselves this morning. So let's go ahead and get started and see what we can eke out of the charts here. The higher time frames have already been covered. There's nothing new to really add to the picture here, except for the fact that that weekly potential bullish divergence we saw forming, basically this RVI line that you see kind of tilting up at the bottom of the screen here was actually pointing down here yesterday. So I said there was a potential bullish divergence going on off of that low of this week's candle. However, as the market is continuing to develop and the bulls got that strong push yesterday, remember in our pre-market, our previous weekly high was 26.75. So once we got through that, we were bull bias up into our expected resistance zones above. And there's that 38% retracement I told you was right there around. Was that the number? No. Let me take that back. But we broke the highs of last week and came up, right? So the low, the divergence that we were looking at has developed a little bit more and is now tilting upward. So we no longer have the potential bullish divergence. That is, unless this RVI moves back down to where it was before at the end of the week. So we'll have to give this time. Remember, the higher time frames are going to take longer to develop, longer to close, and longer to get confirmation. So that's no longer in play. And outside of that, from the weekly perspective, you can see for basically a month now, for four subsequent candles, we've been playing within the same range. So no change going on up top. On the daily, we did have a nice clear bullish divergence back on the lows from March 15th, and we did get a really nice follow through yesterday. Like I said, when we came in yesterday, we were pushing up into, and I'll go over to here, we were pushing right up into the back end of the potential wedge formation, and so that was our bearish bias. But getting through the highs of the overnight session and through 26.75, that previous weekly high was going to give us a little bit more of a bullish clue. So we got through, and when we came up and we pushed right into the 38% retracement here of the whole sell-off from the all-time high at 48.01 down to the lows we made at 94.40, 94.50, we're finding that resistance now. So we also have a bearish divergence off the high. So bullish divergence from I guess 2 days ago led to this really strong push, and now we have a bearish divergence off the previous daily high. So that's something we want to stay aware of. It's also, let's see, we're also at a pretty critical level right there. So if price starts to really pull back from here, this would be a level we would expect that to happen from, right? I think most that are in the room would agree that these retracement levels work they're pretty gnarly the way they work. And sometimes they work to the tick even on in these higher time frames. So seeing a bearish divergence where we are right now is not too surprising, right? So let's see what's going on the intraday time frames. We're going to start to look at important levels to trade this morning. Um, and let me just see if there's anything else to point out here on the daily. I think that's basically it. So let's go down and take a look at what levels we're dealing with this morning. So basically everything that we've been talking about up above, basically all the prices we've been making for the last week or 2 weeks are still up there. So we've got the 61.8 retrace of the smaller leg. So if we zoom out and look, we've got the whole sell-off. But then remember, there was the double top that we came up into, and this was just about the 61.8 retrace of this whole leg right here. And then we started to sell off on that test of that high and started to come down. This leg right here, so this kind of the second half of the sell-off, right? We have kind of the larger leg down that bounced up, and now we're getting that second leg down. So this second leg right here is the fib retracement that I'm talking about. And just to show you really quickly, where did we find resistance yesterday? Right off the 38. So this was the 38% retracement, or it might be the 50, but neither here nor there. 38 or 50 came right into it here, and that was basically the high of the morning. So going back now, and if I could pull this screen over, it wasn't moving. The 61.8 is now up here. So we've appreciably gotten through, and again, I don't remember, I think it was the 50 that we were looking at there. So it came up into the 50, we rejected, we pulled back right into our expected support zone, and we're starting to push back up, and we've pushed right back into the 38% retracement of the major sell-off from the all-time high. So if we continue to chug here and the bulls still stay strong, we've got the 61.8 retracement of the smaller leg right here that we're going to be pushing up into, and that is up at 93.75. So just be aware of that level. If we do get up there, it wouldn't be surprising to see some type of hiccup or pullback from there. And then if they continue to push, we've got the two swings that we were talking about for a few days now. So if we do get through the 61.8 retracement of the smaller leg back here, we have the area right around the swing at 44.15ish, and we have the swing low up there at 44.31. And keep in mind that first swing I just mentioned at 15, we also have that high at 11. So it's like 11 to 15, 44.11 to 44.15, and then if that breaks, that 44.31 is going to be sitting right there. Any further from 31, I think is a nice straight shot all the way up to 44.48 to 40. Well, let's call it, and what's the actual number here? 44.47.75, which is 50% of the whole sell-off from the all-time high, up into that gray zone that you see, and that gray zone is one of our structure areas. So if you zoom out and look, we're going to be pushing right up into this structure zone right here. So very important level for the bulls to get through if they're going to be strong. So be aware of those. So I know it seems like a lot, but you have to keep in mind that these levels are actually pretty far apart. So even between 14 and 11 here and the next level, we've got a good 15 points there. So plenty of room to still make money between these levels. Any further up through 47 to that 50, 55 area, it opens us up for a pretty straight push all the way up into this major swing low at 45.10. So we've got this next zone, and this is the last zone to the upside that I'm going to focus on, and that is this major swing low back here at 45.13. So let's take a look. We've got 45.13 right here, and that also happens to be right where the market failed back over here. So this little area right in here from about 13 to 15 would be the next area I'm looking at if we get through that major structure dividing line. So that's what we have up above. Remember, I'm not going to sit here and tell you that we are guaranteed a continued bullish push into these areas. But if the bulls do get the strength and we start pushing, those are the main levels you're going to want to be aware of. Just like all the other levels that we mark every morning and they come down and they pull back right into them and turn. That's exactly what I would expect up at these areas. So on the pullback, what are we looking at? I'm going to jump down into my 60-minute chart where we have all my major eye levels on the new contract. And I want to show you something really interesting here. When we go up and we look at all the shaded zones that we shaded were based on Fibonacci and market structure. And if you look, these zones that we've highlighted basically fit right in between all of the major levels that I've marked on the chart. And let's see if we go all the way up. I don't remember the final level we had on here. Oh, I know why. We need to make these all charts and this one all charts. And then we'll be able to see that final one up there. I think this one is on there. So I just want to see if that final level up top, which was 45.13-ish. Yeah, oh, look at that. We've got a major eye level at 45.13. And then the 61.8 extension of this larger leg down here happens to be right in that area as well. So I love how everything just lines up perfectly. Like you can't get much better than that as far as the confluence of the levels and everything else. So let's look at what we're dealing with on the other side of things. So if the bulls don't continue to stay strong and they start to really sell the market off, we've got a lot of stuff below us. And we've got a lot of stuff because if you just zoom out and look, I mean, this is what we're pulling back into, kind of like 2 months worth of chop, 2 months worth of sideways chop. So there's going to be a lot of crap down here that we're going to be contending with. First thing that sticks out to me is that we have the first fib here, and that would be the fib from the previous daily low, which happens to be our eye level. So the low of yesterday was one of our eye levels. Interesting. And then we bring this leg up to the highs either of the overnight session or the previous daily high, whichever high is higher. So we come up to the previous daily high because that's what is the highest level we have. And the 50% retrace happens to be our eye level right there at 0.75. So that level to me looks really, really ripe if they do come down. And then the 61.8 I went ahead and marked here. Let me make sure it's all charts. I have the 61.8 marked just because it's the 61.8 of the entire last day of price action. I don't see, well, actually there is some really strong buying coming out of that area, but don't see too much else lining up there, but I do have it marked just in case. The 38 retrace of yesterday's price action is basically where we just bounced here in the overnight session. So I'm going to get rid of that fib. I've got my 38, my 61.8 retrace right there. My 50 happens to already be marked up on the chart there because it's already 50% of the previous day and an eye level that we've had marked on the chart for 2 days now. So if we get through that first fib leg, which is the previous daily price action, we're going to be pulling down where? We're going to be getting down into that 42.62 level, which also we have this major swing high back here at 42.63. So if they get through these few zones we just mentioned, that 63.25 to 62, I have it shaded. You probably can't see it from that far away, but there is a shade right there. And then a little bit further, remember yesterday we highlighted this zone right here between 40 and 43, give or take a few ticks. The market came down right into it and bounced out and came up. So this morning, rather than using the same zone, what I'm noticing is 50% of the whole push, this major push, remember, not from yesterday's low, but the actual major low here in the last few days, which is down here. Um, that push, if we come down and let me see here, and we look at where the 50% is lining up, it's lining up just about 2 points above our minor eye level here at 42.44. So instead of relying on this bottom end, what I'd like to rely on this morning on the pullback would be that little zone right above it. So we've got 48.50 down to 44 right there. That would be another zone I would expect to see support if there's going to be support. And then finally, a little bit further down, it brings us down into this area. And these are all the levels we never came down to test yesterday. So we still have the same levels from yesterday's pre-market. And so we've got kind of a little zone here between 97 and 4200. We've got this little area about 4183 down to 4179. And then the eye levels that you see here, 4213 and 4189, are kind of like you never know. You never know because it's such a strong level that they could come right into it and use it. So just be aware of the larger levels and then these little pockets that I have highlighted, because just like in the past, these are the areas where we're going to expect to see the major turns. We can't predict which one is going to be the level, right? Because nobody knows where the market's going to go. But at least we have all the expected levels marked, and now we can focus in and trade and find entries in these areas. So I think that's basically it for this morning. Um, we do have a daily, a 4-hour, and a 60-minute bearish signal from that overnight high, or I'm sorry, from the previous daily high. So if we do start to pull back, it could be a pretty protracted pullback, because we do have, again, a daily bearish signal, a 4-hour bearish signal, and a 60-minute bearish signal up top. And let me just say that with the caveat that that does not mean that the market is going to sell off 200 points this morning. It could happen, but we just want to be aware that if it starts to get heavy here, we have a lot of stuff backing us up top. So I think that's it. Let me see. Don't think there's really much else to add to the picture here, other than the fact that despite having the hike in interest rates yesterday, the market, in my opinion, doesn't seem to have done much, right? There was an attempt to break out here. We came right up into the back end of one of those major fib levels, and now we're having trouble again. So, I don't really expect there to be a major reversal in the market right now to trek back higher. And if we pull back into the zone basically if we retrace the current leg that we're in, we're unfortunately coming right back into a major chop zone. So there's going to be a shitload of stuff down in here to contend with. So safe trading out there. Enjoy. Have a great morning and a great weekend. And we'll be back here on Monday to take a look at the higher time frames to see if anything has changed between now and then. So have a great day, and I hope you guys kill it this morning in the markets. See you then. Bye bye.